Hello. Hi everyone. Welcome to Q&A for Q1 2022. I'm sure you're all really excited because I'm streaming again. It's obviously a red day. The curse was lifted for one single stream, and now it's back. So I'm streaming. That means we all lose money. Sorry. Well, only for a day or so, hopefully. Okay, so if you haven't done this before, if you haven't attended one of these before, it's pretty simple. I made a post on eToro where people can ask me questions, and after that, I'll answer questions from the chat. Before I do that, just a few kind of disclaimers and stuff to go through. Obviously, none of this constitutes financial advice. I don't know your personal circumstances and your financial situation, thus I cannot advise you on anything financial or investing related. Obviously, my views are my own. They don't represent eToro or anyone else. Yeah, that's more or less it, really. So with that out of the way, you can start asking your questions in chat if you haven't already. I'll probably go through the ones on eToro first, so I'll just share my screen, and then we can get stuck into it. And I will inevitably forget to change my camera back when I've stopped answering these questions, because that's what I do every time. So weren't so many questions this time, because we actually had quite a lot of questions at the end of the stream last time round on Tuesday. So that was the quarterly update. That's now up on YouTube if you want to go and watch it. But yeah, the questions after that actually went on for a reasonable amount of time. So I'm not expecting it to be quite so long this time. Normally we go for a pretty long time, like 2 hours or so, but I think everyone's probably outside ignoring the markets given how red it is today. But if you're here and you're witnessing the blood, then good on you, I guess. Okay, right. Let's start. So first question from Make Nom Nom Great. The obvious question: how do you view your performance? Did you outperform the benchmarks, and how are you doing? So 2 questions really. Well, almost 3. So performance-wise for Q1, it wasn't as good as I hoped it would be. I was really hoping to outperform the markets, but a few positions that were hit pretty brutally. Shopify, Netflix, Spotify had a pretty bad Q1. None of these were really major positions, but they all got hit pretty hard. Ford started Q1 really well, and then kind of faded a bit. The semiconductors had a pretty poor Q1 up until this earnings, at least. The same with even solar. Wind got hit pretty hard because of all the commodity stuff. So yeah, overall I missed pretty much all the benchmarks. I was only just outside beating the Nasdaq, so only off by a very small amount, which I don't mind too much. That's within tolerable levels. The probably I guess the only kind of highlight was that I did beat the European markets. It's not too surprising considering what's been going on in Europe with the conflict with Ukraine. So yeah, I mean, there's not much else to say really. Yeah, I didn't beat the benchmarks, but I was within reasonable tolerance. So I was pretty content with how it went, to be honest. Especially when you actually kind of delve into the sectors that I'm exposed to, and the fact that I don't really hold any fossil fuel positions or mining positions and things like that, which were really the things that did well. Commodity markets did well, and stuff that wasn't related to Russia and was more related to weaponry and things like that, they did well. And I don't have exposure to those because of my ethical stance on most of them. So yeah, not amazing, not bad, not terrible, just kind of okay. Would have hoped for better though. As for how I'm doing, yeah, I'm pretty okay really. Markets for the past 2 years really, it seems like it's just non-stop action, and I think today is another example of that. Things start looking up again, and then here comes the 50% rate hike. So 50%, 0.5%, 50% would be crazy. So yeah, all things considered, pretty well. Moved house. I'm pretty happy overall. Just doing my thing. Thoughts on shipping companies like Zim and DAC? You know what? I don't really look into shipping companies. I did look into them a long time ago when I was looking at getting into logistics, but I haven't looked into them since. So that was back in 2020 when the supply chain situation kind of hit. I was looking at those companies then and kind of investigating them a bit, but I've never really seriously thought about investing in them. And I opted for rail stocks instead. So I don't really know too much about them. So I don't think I can really give you anything good on that. I'm afraid. There's it's just not an industry that I'm really that exposed to. I think that there is probably some pretty good opportunities there because I think shipping is one of those industries that can switch to become greener relatively easily. There's some pretty cool technology around the turbines that they put on it and around the fuel and ships going a bit slower to carry goods. So there's some good in terms of like the ESG perspective and the premium that brings to stocks. I think there's a pretty good opportunity to see those companies improve a lot. So there's some opportunity there that will command a higher valuation just because it's greener and people prefer greener stocks and more green funds and stuff will invest in them. Beyond that, though, I don't think there's really that much going for it. Not really my thing. I guess probably a pretty good dividend play at the moment as well. I imagine they give quite healthy dividends, but not my area of expertise. Okay, next question. Any expectations on timing for Fed to pivot back to easing? Well, given what's happened today, I would say it's not imminent. Related to current popular topics, ESG, war, sanctions, inflation, do you expect major public spending or incentives that could boost certain sectors or stocks? Yes, I do. I think it's pretty obvious, at this point, it's become the obvious thing that renewables, anything that's not gas or oil, is probably going to see some pretty healthy incentives for adoption by the public. Whether or not the public will have any money left to spend on it is another question. I'm not too sure about that. But that's the other obvious one. I guess we could see some stuff around, food and things like that, and maybe around some of the related technologies, and also, I guess, bailing out some of the really big companies if they start to struggle. Financial institutions should be fine because they don't generally do pretty well during these periods. People move their money to safer places, both for wealth management purposes and just banking purposes. So they should be pretty healthy through this. So I don't see them being at any risk. I don't see anything like 2008 on the horizon. But we may see maybe airlines start struggling again and the travel industry slow back down again if rates get too high because people will be scrimping and saving. So they're going to be spending less money on things like that, things that they don't need. So we may see some bailouts for that kind of stuff because a lot of governments like to protect their airlines, especially if they're like kind of national ones or whatever, like Singapore Airlines and things like that. So there's that could be an opportunity for some people. I'm not really too sure beyond that really where's going to do really well. I mean, the valuations that we have on consumer staples at the moment are pretty much commanding higher price to earnings ratios in some cases than growth stocks that are growing at 20 or 30% a year. So it's pretty hard to see those really getting any more attractive than they already are. If anything, I think they're probably going to get worse. I guess that's it really. It's we could see automakers maybe get some favorable treatment as well, especially in the US. The likes of Ford could see some support. Semiconductors, I guess, is the final one as well. Obviously, the US has been spending quite a lot of money to try and lure some of the big companies like TSM and Intel to build new fabrication plants in the US. So we may well see that do reasonably well as well. But generally speaking, I don't think there's really anything better than renewables for where to put your money in this kind of a situation, or just with some of the dividend stocks. Even properties and land is questionable at this point. Okay. I don't know if that was a reply. Okay, no, it wasn't. See, like, there's not very. I should probably have refreshed this actually before I started, just in case anyone did post anything extra on here. I'll do that quickly now. Like someone's. Oh no, they didn't sneak in. It's not me. Okay, I answered this guy already because that was a specific thing that he was asking about right now. Asking about adding funds and if you can copy open trades. You can't copy open trades. It's not available as part of eToro's copy block function. Also copies adding funds to open positions. So you can only add funds and they get put in the pot ready for me to use whenever I open a new trade, which means it takes quite a long time to, get your funds deployed, unfortunately. Even longer at the moment as well, because I've not been cycling positions quite as regularly, because I don't think too many people are adding lots of funds. And there are some other reasons, but I'll go into that at some point soon, hopefully. I think, yeah, there's nothing too exciting here. From Felix, good YouTube channel if you haven't watched it. If you want to find good people to copy on eToro, or just kind of learn what to look for, maybe. While I'm in the mood for plugging things, I'll also plug Gavin's podcast as well, Copy Traders Club, because I like that too. Where do you see hydrogen and fuel cell markets versus EVs? Ford versus Plug. Well, Ford and Plug are very different companies. So I think, you kind of made the wrong comparison, really, because hydrogen isn't really going to be a thing in Ford's market for the most part. It's really much better suited for really long distance vehicles. So I think shipping is going to be the biggest thing for hydrogen in the medium term. It's good for trains if you can't electrify the railways. Then it can be good for trains. You can replace diesel. Hydrogen trains have been around for a pretty good amount of time now. Hydrogen trucks are starting to hit the market. I actually saw a battery electric truck at the weekend at an EV event, and looking at the stats of it, it was a Volta truck, I think. Reasonably large, but not like a big full articulated. And it looked okay. Maybe a little bit flimsy for what you'd want to be carrying lots of big heavy stuff in. And the problem is that they mark the range on. I think the range on it was like 180 miles or something, or 140 miles, something around there. I could be completely off the mark, but it was something like that. And it didn't specify if that was with anything loaded in it either. So if you imagine then filling that with some pretty heavy pallets, full of, I don't know, whatever it is that people ship that's heavy these days. I don't see it really being viable at that kind of a distance. Even if your charging infrastructure is really good in the country that you're using it in and stuff, there's very limited scenarios where you'd find a truck like that better than just a diesel or petrol truck or a hydrogen truck. So we'll see. Hydrogen's biggest problem is waiting for the infrastructure to catch up at the moment, I think, because hydrogen vehicles are pretty close to hitting the market now, in some sort of a more meaningful way, but without places to refuel and such, I'm not sure how quickly they're going to catch on. I actually think hydrogen is a much bigger thing for just energy storage generally, even though it's pretty inefficient to convert electricity into hydrogen, then hydrogen back into electricity, and the losses there are pretty substantial. In terms of scale, nothing really competes with it yet. So if we're thinking about ways to help the grid handle demand, then that's something that hydrogen is really good at. So that's it for the questions on here. That didn't take long. Let me see if I can scroll back up here and start on these. Okay. First question. What cryptos are worth investing in while the market is dead? Got some cash to pump in. um, you know what? Oh, actually, am I at the wrong end? Is that the most recent question? No, it's not. I was just checking. What cryptos are worth investing in at the moment? That is a tough one. Yeah, I think realistically, I mean, in terms of what I'm doing, mainly like personally, even outside of eToro, I don't have very much on eToro. I think I've just got a bit of DOT and ETH. I don't even have any Bitcoin at the moment. If I can find, yeah, there's my Polkadot down here, and there's my ETH. So very small positions on both of them. You know, in total, maybe 1% exposure for my whole portfolio, a little bit over that. So yeah, pretty low exposure for me. And I think generally that's the way I feel about it, is that it's going to be the tail end of this year when things start picking up again. Bitcoin is very clearly correlated with the Nasdaq, as are most of the altcoins, because they're correlated with Bitcoin. So my general feeling is that you're probably going to want to wait a little bit longer for interest rates to reverse. There is an argument that Bitcoin is more of a hedge, supposedly, against inflation. But to be honest, I don't really buy it. It did end up holding up a bit better this year than I thought it would, but you know, it's still dropped a good amount, similar to everything else, really. So yeah, I don't think it's necessarily something that you want to be throwing money into. To be honest, I really think that you may end up doing better, especially with Bitcoin, because of how big it is already. You may end up doing better by throwing some money into some of the really cheap growth stocks around this kind of time. I mean, even stocks like Sunrun and some of the solar stuff, or Plug is a pretty good example of a stock that's very heavily drawn down. I think it's about 80% down now from its highs last year. So yeah, I think those actually offer a bit of a better opportunity than crypto in some cases. Not saying you shouldn't build exposure, but yeah, if I were to build exposure, I think Ethereum would be the biggest thing that I built it into, and then after that, Polkadot, Bitcoin, and a few of the other major coins as well. There's not really much outside the top, 20 or 30 coins that I would really consider at the moment. Okay. Luna is best coin. Do you ever live stream gaming sessions anymore? No, I don't think anyone would really be that interested, to be honest. Don't know. Maybe they would. At the moment, my PC isn't really designed for it either. The PC that I'm using is not a gaming PC as such. It's really just a PC that I built specifically for work. So it does struggle a little bit with FPS and stuff if I try and game high frame rates, let alone if I then try and stream that as well. So I guess it's not something I'll really consider for the time being. Johnny asked, "Are NFTs dead yet?" They're getting that way, to be honest. I saw an article by the Wolf of All Streets that basically had the same question / title, and yeah, I mean, it does seem like they're starting to flatline a bit. Really, I think it's a massive oversaturation of NFTs, and people are starting to realize that, just because you make an NFT and draw some cool cartoons or whatever, that doesn't make it valuable. There really needs to be an appreciation for the art and, an economy around it for it to make sense. And there aren't really very many NFTs that kind of fill that criteria yet, to be honest. There's a handful. If you're not looking at like some of the big names, like, to be honest, if anything, right now I'd start looking and seeing if I could find like an early crypto kitty or something. I feel like those are more likely to come back and be worth a good amount than most of the other NFTs that are out there, just because of the history of it, right? Being one of the first big NFT projects, and I think they're still working on it quite a lot as well. So yeah, stuff like that, or obviously Bored Apes and stuff. Those are really the ones that are the only thing that I would really consider getting into. I don't know if there's like a way of kind of getting into those without spending stupid amounts of money. If there's like a kind of a way of sharing a Bored Ape between a lot of people, but if there is, then maybe that's worth looking into. I wouldn't be trying to get very much exposure. I still don't own a single NFT currently. Yeah, I will eventually. I'm sure I will. There's lots of art that I like and artists that I would like to support, and things like Streeth, which is a project that I advised on a bit. They have a pretty cool, I guess, product and a cool use case for their NFTs, in that it's graffiti, and graffiti gets kind of removed from the world. It's not very durable. So if you buy an NFT of someone's graffiti, then you're actually getting something that you may not ever be able to get if NFTs didn't exist. So, well, I like that, but not much else. Okay. What do you think about the future of Crow? They recently reduced staking rates. Yeah, I know. So I was a big fan of Crow, really big fan, until they did that. I have a Crow card. I've had it for maybe a year almost by now, I think. And yeah, I really liked it. But when they took that decision, I was umming and ahhing on if I should just unstake immediately and take my Crow out, because it was clearly no longer worth it, or if I should wait a bit and see if they reverse the decision. And I ended up taking most of it out and going for a much lower stake of Crow. And then they reversed the decision, so my timing was pretty awful. Well, I say they reversed the decision; they reversed it, sort of. They did a soft reversal. I think really it's a little bit concerning to me that management didn't see how doing that could be a bit of a problem. It was only 3 months ago that they reduced the staking rates from their earn program, and then to make such a dramatic change this time by cutting the cashback rates on their cards pretty much in half for all of the cards, and then removing the Crow stake entirely. It doesn't really make much sense for someone to put 30,000 or 300,000 pounds or euros locked up in a coin that doesn't give them anything back to get a card that isn't really much better than what you could get at a high street bank, especially as interest rates are rising and we're going to start seeing better offers coming from banks soon. So from that perspective, really a bit concerning that management made such a decision when everyone else is starting to lift their rates and improve their offerings. They're cutting back on theirs, and they're doing that at the same time as sponsoring some really, really big events. So a bit concerning. The good news is that I didn't even notice that Crow got listed on eToro until recently, so I didn't bother investing in it. If it had been listed sooner, I probably would have been holding some, and maybe we'll be sitting at a loss on that now. But yeah, it's not that it's a terrible coin or terrible company or project, but it was a bit of a blunder decision in my opinion. And yeah, I mean, you could argue that maybe now's a good time to buy because it's a bit cheaper, but as I said, I think there's probably equities that will be a better buy instead. Just trying to find the next question. One question about your thoughts on the recent change to the Crow. Oh, yeah, that's the one I just read. Did he post it twice, or did I just read it twice? Oh, someone else posted it before. Okay. Thoughts on Square and MicroStrategy as Bitcoin-related proxies seem quite cheap at the moment. Well, if you saw on the MicroStrategy call, because they just released earnings, I think yesterday or the day before, they pointed out that uh, Bitcoin only needs to drop down to, I'm trying to remember what it was, like 21,000 or 22,000 or something for them to be margin called on one of their positions, which is a little bit of, I don't really know why they highlighted it in the way that they did, because, that makes it sound really bad. But in reality, it's most of their crypto isn't leveraged, so they wouldn't really be margin called because they'd just add a bit more behind it to a bit more collateral for it, so they wouldn't really be margin called. But yeah, it's so. Well, I guess I've almost answered the question with that, right? Is that it is a leveraged with them, at least it is leveraged exposure. Um, I'm generally more of a fan of the kind of picks and shovels plays. Instead of going out and mining for gold, start selling some pickaxes. So I think the likes of Coinbase and things like that are probably going to be better options in terms of risk to reward, at least in the short term, because you know. Especially something like Coinbase, for example, have got a pretty healthy market lead. They just released their NFT product and stuff. Well, Square, Square for that reason is definitely more attractive than MicroStrategy. But again, I'm not that sure if now is the moment to be piling into crypto. I really think that we're probably going to have to wait for one more rate hike to come in, or at least a bit longer to see, how markets kind of respond, and how, where we sort of stabilize. And at that point, I think it's a good time to invest in that kind of stuff. Yeah. Do you think we'll be back in the green by the end of this year? If you had to take an educated guess, what's your performance outlook for 2022? Yeah, it's such a difficult thing to try and predict in these kind of markets, really. So as much as the market today is completely red because of this rate hike, I think it's the correct decision. I think zero point 0.5 rate hike is really sensible. I don't think 0.25 would have been enough. I don't think doing nothing would have been enough in any sense whatsoever, for the US at least. I think in Europe it's maybe a little bit different because of what's going on with Ukraine, not too far away. And obviously the kind of cost of living crisis that's hitting everyone as well. So I'm not sure that would necessarily help if interest rates go up too quickly. But in the US, I definitely think that it was the right move, even though it hurts markets more in the short term. Um, how long it's going to last? I mean, realistically, like we're going to be waiting at least 3 more months until we get to a position where we have an idea on, as I said, like how much more is to come, or at least a slightly better idea. And then generally markets tend to turn around faster than the stock market turns around faster than the actual economy. So the market will project that the economy is going to start doing well, and you'll start seeing companies raise their guidance more than people were expecting during down markets. And then after that's when you get the couple of surprises, right? You start seeing earnings come in, and a few of them will surprise, and you'll be like, oh, actually, this isn't looking so bad. And then you get the CPI numbers and everything else that kind of highlight how inflation's actually looking. And realistically, like we're not going to get that until probably Q3. Well, not even Q3, like Q4 really is probably when we're most likely to get that. So really at the end of the year, like November kind of time. And that kind of like lines up with the last rates before the holiday season as well, for the US and UK and a few other markets. So I think that's really the time that we'll start seeing some optimism in markets again, like some proper optimism. That doesn't mean that that's when the bottom is going to be. The bottom may well be before that. And as I said on my stream yesterday as well, a bear market generally lasts between like 12 and 18 months, and we're a good not even closer to the 12 months than the 18, and we're a good six months in now, so we're kind of at least halfway down, maybe more. We all saw how quickly COVID corrected, but obviously that was a very different situation. That wasn't inflation. That was the issue. So We'll see how things go. The war in Ukraine could be another big catalyst for how markets move as well. There's some suggestions that Russia's going to kind of offer peace on the 9th on V-Day, but we don't know. It's all speculation, really. Odie's in the chat. Good to see you, Odie. Okay. He's an OG, super old school founder of an esports team back in the day. When will we see the inflation drop? Oh, I never actually gave an estimate on my performance as well. So let's do that, even though I kind of don't really believe in it, and I'm probably going to be wrong. It's hard to say. Let's have a look at my stats quickly. So obviously this hasn't taken into account what's happened today, and today I think the market's down by some 4% or so on the Nasdaq. I think. Let me just check. Sorry, if I look like I'm staring upwards, it's because I am. Yeah, 4.17% on my top screen is what it says. So yeah, we've lost most of what we were up in May, but we are actually still green for May, which is something, I guess, but not that surprising after how disastrous April was. Nasdaq, I'm not sure how far the Nasdaq is in total down now this year. Let's get a rough estimate for that. Yeah, 22% down, roughly. So I'm actually outperforming it pretty well at the moment. Well, not so much because obviously this number needs to update, but I think I am actually outperforming it again now, which is nice. Yeah, I think like 25-30% down is reasonable to expect if we assume that it doesn't turn around until the very end of the year or start turning around until then. It really depends how much further we go down. Like if I look at charts, then it seems pretty likely that we could get down and maybe test somewhere just above 1200 on the Nasdaq, which is a good substantial, like at least 10% lower than where we are now. I think maybe not quite 10%, but yeah, a good amount, like 7% more. So when you compound that, yeah, that works out probably around 30%. So 30% would be like the kind of, I guess, average guess of where we might end up. Things turn around more quickly, then it's possible that we can make a profit. If some of the sectors that I'm in outperform, which is obviously why I invest in them, then it's possible we could end up minus 10% or something. It's more likely that we are going to still lose a little bit more money this year than make money. Which sounds like, why would I stay copying? What's the point? If I'm just going to lose money, I could withdraw it now and then go and put it in a bank and then come back later. Well, first of all, you can't recopy me probably if my assets under copy are too high, so you wouldn't be able to recopy me. And the other thing is that, like, while it seems like you're just taking losses at the moment, what we're really doing is positioning the portfolio and making sure that we're well positioned. Nobody's going to time catching that bottom perfectly. You may well think that it's like I think, that it's probably November-ish that we're likely to see things start turning, but it could be next year. And then you would be buying in and you'd still be driving lower, or it could be sooner, and then you'll miss out on a lot of the gains. We saw yesterday and today how quickly markets move when this kind of news comes out. So yeah, I don't think it's really worth the risk of missing that, especially at this point. If you've ridden it this far, then it's not too bad to go that much further, unless you're due to draw out your pension literally next year, and you were planning to spend all of that money on retirement or something imminently. Then yeah, it's probably better to just wait another year or so, and then be there for the recovery, hopefully. Look at that. Remember to switch my camera back. Good for me. When will we see inflation drop? I guess that's pretty related to the question above. Well, I think you kind of had it right there. Until the more interest rates go up, then the more appealing it becomes for people to start saving money instead of spending money. And as people save money instead of spend it, then there's less growth in the economy because they're not out there kind of doing much with that money. Yeah, it could be a while. To be honest, it could be a while. Like it's because the thing is that we're at this point where inflation is high enough that it makes things just that little bit less certain on how easily it's going to be kind of reined back in again. There's all sorts of approaches to trying to to change it, but really interest rates is the only thing that we've got that's really effective at the moment. You can't really cut spending more than you already have. When you're not buying assets like the US has been doing, I think they bought like 4 trillion worth of assets and like equities over the past year and a half since COVID, or 2 years since COVID. Once you stop doing that and you stop spending that and you stop supporting the markets, it's not like you can kind of do the opposite, really. I mean, you kind of can, in that they will maybe sell a lot of them. They'll want to sell a lot of them, but if they sell them too aggressively, then that pushes valuations down further, and that hits people's pensions and people's savings, because obviously people's savings are invested in stock markets and bonds and such. So it's such a difficult thing. I don't envy the job of economists trying to figure out how to get it back under control, but interest rates are, the clear option for trying to do that. So that's what I'm expecting. Like we're going to see interest rates above 1% for sure in every country by the end of this year. I think maybe not every country, but every major country. And only then will we really get an idea on how well that's working. And of course, if you have interest rates of, like, let's say 1.5%, then you're going to get savings rates at banks that are similar, and bond yields are also going to be similarly high. So, it gives more reason for people to be investing in safer stuff and not spending their money, which should slow down inflation. Okay. Does kind of depend on if it's push or pull inflation, though. Why are you so confident about Ford? Well, because they're doing a good job. No, more seriously, I think if you actually I think it depends a little bit on who you're comparing it to, right? So if we now, at this point in time, go and look through all of the different companies all the different, let's say the new EV companies, so the likes of Tesla and Lucid and Rivian and all of those kind of companies, and we look at their balance sheets and we look at their debt and we look at the kind of the sales numbers and how many vehicles they're producing, NIO, for example, XPeng, like all of those guys, what you're going to see is that sales have started to tail off a little bit for most of them. Not for all of them, but for most of them. They've started to tail off, and the hype has kind of died down a little bit. And not only that, but we're seeing more and more of them run into exactly the same problem that Tesla ran into, which is that they aren't legacy auto companies. They haven't tried running factories at such large scale before, and they're struggling. Look at Rivian. They don't have the experience of managing supply chains, and that's very important at a time where supply chains are really, really kind of tight, I guess, and where you're having to, try and buy components in bulk and pre-order and project demand very well, and also at the same time be kind of planning your vehicles in a way whereby you're using the same components and you're not wasting too much and you're not holding things for too long, because then you're losing money on it. You don't want to be spending so much money on having lots and lots of inventory that you then can't sell. And when you think about like the commodity markets and everything, and the pressure on companies to ethically source their components for their batteries and such now as well. That's a really big ask from a startup. And I think that's where I see it in combination with the state of balance sheets in a lot of cases. That's where I see it being an advantage to either invest in Tesla basically, or to invest in one of the legacies, because they've already got everything up and running. They're not too concerned about trying to manage or learn to manage those things, or finding problems and how to resolve them. They've done all of that a million times. So they're much safer investments, and a lot of them still pay out dividends even as well. So you can be earning dividends at the same time. And I think the gap in technology and the gap in batteries has really come down quite a lot. Tesla's still very clearly got a big advantage, both on batteries and on self-driving at the moment. But I think when you look at a company like Ford, and you look at the way that they were positioning 3, 4, 5 years ago now, they went through and basically ripped out and gutted parts of the business. 5 years ago, they had a massive reshuffle. They changed management twice from them. They basically brought someone in whose job it was to, find where the money was going and where the waste was, and just cut it out. And that's what they did. They cut away a lot of their business that was in India and in South America, and markets where they weren't really performing. They cut down their product lineup massively. They just stopped producing certain vehicles, not videos, certain vehicles, and just didn't bother with it anymore because it wasn't profitable, and it wasn't sensible, and it wasn't sustainable. They focused on the categories that they're strongest in, which is utility vehicles and obviously SUVs everyone's competing in, and then the big brand names that they have that people like. So the Bronco, the Mustang name, which obviously they capitalized on for their EVs. And then on top of that, they've made some really sensible partnerships as well. So, for example, their partnership with Sunrun, which is for their backup battery system. So you can use your car as a battery for your house in the US. So Sunrun basically helped them produce like a battery and a charger and a kind of cutoff similar to Tesla Powerwall. And then they can use that to have their vehicle power their house if there's a power cut or something. As long as it's plugged in, it'll all be automatically done. The technology that they developed on vehicle towing, right? So when you tow a vehicle with the new F-150, then it figures out the weight of the thing behind it, and following on from what Tesla did, they use the cloud, right? They upload all of this data on driving stats and how long the range ends up being, and which route people take, and what the weather's like, and they learn from that how far the range is going to be depending on what you're towing, what shape it is, how long it is, what roads you're going on, what time of day it is, to better predict your range and give you better GPS and stuff. And I don't think there's that many autos that are really in that position. I think GM is in a pretty good place. I think Mercedes, Daimler Group, and maybe VW as well are in pretty okay positions on that side of things. But that's it from the legacies, really. Like, some of the Korean companies like Hyundai are good as well. But I think Ford is still in first place out of that group on the tech side of things. And then the other thing is that they have Ford Credit as well. So where everyone else is kind of outsourcing, it's weird, right? Because it's kind of like a relic of having a dealership model, which most people are trying to move away from now, including Ford. But at the same time, their dealership model is profitable for them in a very different way, because they're essentially the people that are lending the money to their own sellers, and it's just so much more streamlined, and they make good money from for credit, and it just helps stabilize the business more as well, especially during markets like now where perhaps lending would be more difficult for other vehicle forecourts that are trying to sell some cars. they may struggle to get the capital in place to get all of the vehicles to put on their forecourt and show off to people and then sell to them. Whereas with Ford, because they're going directly to Ford, it's a much kind of cleaner, smoother operation. So I mean, I could talk about Ford for a really long time, and probably bore most of you to death. But yeah, I think those are some of the main reasons for me. And yeah, the state of the balance sheet is just it's good. It looks pretty decent to me. The products that they've produced have been good. So I'm not sure what more there is than that. They have competitors now. The Chevrolet pickup truck looks like it'll be good, but it's not out yet. They're late to market, whereas Ford are basically first to market because Rivian barely produce anything. They're putting out maybe 700, 800 vehicles a month at the moment. So all of those things kind of play into it, I guess. But that's why I like it. I don't necessarily think that it's always going to be better than something like Tesla, but I think that when you look at valuations, it's hard to justify buying Tesla. Like they're valued at basically the same as everyone else combined, and it's just like they're not going to have 50% market share in 5 years. They're just not, or 10 years. So how can you justify that valuation? Clearly, something on the other side isn't valued correctly, or Tesla isn't valued correctly. Okay. So that was a really long answer. Sorry. Asking me questions about Ford. It's my biggest position. Got to defend it. JPEGs need utility. Otherwise, they are just JPEGs. Do you mess around with any futures and options? Do you think eToro should start incorporating some of the derivatives instruments? I would love them to have options. Option markets are just so useful for, well, both for using it for hedging through volatile events, and I guess selling them is nice. Everyone talks about buying options, but selling options is a really nice position to be in as well. Whether or not eToro are likely to add that kind of stuff, I'm not sure. I think they did mention some time ago that they planned on adding it for US customers, adding options. I'm not sure about how likely anything like that is to come to Europe and the UK. So yeah, more instruments like that can help with hedging and things would definitely be really useful. Okay. Just got an ad. Oh no, I forgot to turn the ad thing off. Oh, I did it again. That is not good. I don't know where you turn it off. I can't do it midstream. I said this last time. I completely forgot to check that and see what was causing that. Well, sorry about that. If I'm being interrupted by ads, you can always watch me on YouTube afterwards if you miss it. How's your wealth management certification coming along? I didn't take the wealth management one. I took the I can't even remember what it was called now, but I passed it. It was it was a while ago now. It was like 6 months ago. I need to do some of my continued personal development stuff, but apart from that, yeah, it was good. I passed it all first time with pretty decent margins of error, I guess you could say. Good buffer. Yeah, it was okay. I actually quite enjoyed it in a weird sort of way. I mean, it's weird, right? I got to learn some good stuff about areas that I don't invest in quite as actively, or don't specialize in, or in some cases just don't really care about that much. So for me, mainly it was in like strategies around bond markets and stuff that I just don't really find that interesting. But then like doing options and stuff was really fun because I learned a few extra things that I didn't know about option markets, and that was nice. It's nice to improve my knowledge there because I like options markets. I think they're kind of interesting, cool. On futures markets, I think they're really kind of fascinating. But yeah, I guess coming along okay. I do plan on doing more stuff just on my own now as well since I started, because why not? Helps me improve. 0.75% being priced in for June hike now. Estimates around 80% confidence. Yeah, it's going to be interesting. I don't think it's. Yeah, I don't know. I think we're going to end up at like. I'm not sure. I think we're going to end up at like 1.25 or something like that by the end of this year, maybe, on the US rates, and Europe will be a bit lower. And I think that's probably about right, though. I think that's probably where we need to be. And like it's weird to some extent. It's a bit weird seeing the market react the way it did, like dropping all the way down to the absolute lows of when the Netflix earnings came out, which is basically what the Nasdaq's done now, and acting like the sky is completely falling. And wow, this is such a shock. Nobody expected it. Like, I mean, everyone was expecting 0.5. And then when it didn't happen, we were all like, "Oh, there's not a 0.5. We should rally," you know. And now we've gone back down again, and it's like, well, I don't fully understand it, because earnings that have been coming out have actually been pretty convincing across the board. You know, cloud is looking good. I mean, like shopping online, e-tail is not looking great. Shopify's earnings were brutal, and Etsy's earnings were not good. But like the tech sector especially is not actually that bad. Like, I mean, solar earnings have been insane. Yeah, I think it's a bit crazy, but whatever. People with discounted cash flow models are going to input their new number, and suddenly things are worth much less. Even though we were predicting that number being input, 6 months ago, or at least 3 months ago. Do you do day trading on your own time? I'm trying to find a way to grow an account. If you have any tips, I'm here. Not really, to be honest. I mean, sometimes I'll play earnings. Like, I mean, it's been a pretty easy strategy ever since Enphase's earnings to just buy every other solar company's stock a bit before earnings, if it hasn't already pumped by a similar proportion, keeping in mind the beta of that company. So yeah, that's what I like. I did that yesterday. I bought some Sunrun. Sunrun reported earnings. Sunrun beat earnings. I took my profit on Sunrun the next day. I don't use any leverage. I only did it with a very small amount, so it's not really making a massive impact on my portfolio. But it seems. Wait, you can't turn ads off anymore. Is that actually a thing? Yeah, seems like a pretty easy strategy at the moment. I'm not sure how far I'm going to push it, though. I've only been doing it into the companies that I actually know and understand and think will beat earnings, which was Enphase, SolarEdge, Sunrun, and SunPower, who report earnings tonight, I think. Or did they do it this morning and I missed it? They might have done it this morning. Yeah. But yeah, no, day trading is generally not advisable, really. Most people who try and day trade to make money and try and make money more quickly and use leverage get into real trouble, and end up wiping their accounts. There's that statistic you see when you sign up to like any website if you're from Europe, because of EU law, they have to say how many people lose money, what percentage of people lose money trading on that platform, and I think the best I've ever seen is like 66% lose money. That's the best I've ever seen. Some places it's like 92%. And generally the places that have it where they're losing less are the places where there's a more kind of long-term investing attitude rather than day trading. So yeah, that's it really. Thoughts on Elon in charge of Twitter? Are we going to see good numbers? Well, we're not going to see any numbers probably, because I'll take it private, and then we won't get to see good numbers. Supposedly, he's planning on then taking it public again afterwards, a bit later at some point. I'm still upset that Elon was allowed to buy it. If I had access to vote with the shares that I still hold in Twitter at the moment, I would have voted against it because I don't think it was necessary, really. I mean, it is very frustrating that Twitter management didn't add the edit button yet. But in like these arguments for like free speech are kind of mind blowing to me. Like I think Twitter has done by far the best of any platform in managing, you know, the kind of the massive grey area between allowing anyone to say anything and just be a complete dick and, you know, limiting people that are making genuine criticisms and calling things out or just trying to debate in good faith. But I think that you know, it's not even comparable to something like Facebook. You know, Instagram is just a complete mess of scams and body shaming and bots and stuff. Twitter has an awful lot of bots as well, and maybe Elon can help with the bot side of things a bit more. But yeah, I don't know really that he's going to do great for the platform overall. Like, he will probably monetize it sooner and he will probably make more money out of it in the short term, but I feel like some of that is going to come at a cost to like the quality of content and ironically to the freedom the freedoms of people and like the integrity of the platform, right? I mean, Twitter is known as the place that like news breaks first, and so it's pretty dangerous, I think, to be allowing you know, people that have reputations for posting fake news to come back onto the platform potentially. But you know, it remains to be seen. Maybe he'll surprise me. But I'm a bit cautious about it. But I'm holding on to my Twitter because, you know, it's easy money. If you want the easiest trade of the year, just go buy some Twitter. You know, wait until he buys it, and then you know, get a bit of profit. I don't know what it's trading at the moment, but it's just like a easy arbitrage trade because I don't think anyone's like. There's no chance really that they're going to block the deal from going through. And it's actually gone up quite a bit today. Oh, maybe not today, but or is it today? Sometimes eToro's stats are a little bit off, so I have to check elsewhere. Oh yeah, it is actually up. Wow, one of the few green stocks today. Yeah, I mean, you know, he promised to buy it for $54.20, so you can make a like what's that, 8% or something? Pretty reasonable. Probably be done by the end of the year. I mean that on its own probably beats inflation, right? Okay. In minus for May now. Yep. I think I'm still green for May though. Just. Do you think we will see another 2008 in the next 10 years? It depends what you mean by another 2008. I mean, it's not going to be the same causes. Will we see another really big financial collapse of markets? I mean, probably, to be honest, because they're becoming increasingly, you know, interlinked. And the world, you could argue, is becoming increasingly unstable in many ways, depending what metrics you're looking at. Yeah, you know, like probably. It's a long time. I don't know. It depends. I mean, it may well take us so long to recover from this that we don't really have another moment like that. You know, if this takes like 2 years to recover from or something, that's probably us. That's probably the market done for a while. It may well take, you know, like it's plausible that it could take 5 years for the market to get back up to where it was before this decline started, before this bear market started. And if that's the case, then yeah, I don't think it's that likely that we'll see it go down. But the thing about those kind of events is that they're all black sheep events, right? You can't predict them. You know, obviously there's always one person somewhere that predicted it, but it's like, that's just pure probability, right? If you have enough people making predictions, some of them are going to be right. Yeah, so it's not something I can easily predict, but I would say that you shouldn't be betting on it. What emerging markets are you checking on now? Thank you for the update. You know what? I haven't actually, for the probably past 6 months, I've not really been looking at emerging markets that much. Like last year, I was looking at them quite a bit. I was looking at Brazil and some of the countries in like North Africa, like Nigeria and Morocco and such, that I think have got a pretty bright future. The way that they're trending, and some of them in Southern Africa as well. Same in Latin America. There's a few countries that are looking good. I mean, I think Chile looks like it's stabilizing quite a bit at the moment as a nation. I mean, I haven't properly checked into it, but if you kind of follow the politics a bit, then you can get an idea for the trajectory that certain countries are on, and then you just need to kind of figure out, okay, well, what's their economy based on, and countries like especially in a lot of Africa and a lot of South America. There's a lot of economies based on mining stuff, and a lot of the things that they're mining are things that are used in EV batteries, and that market is probably going to be around for a while. They're going to need a lot of it. There's work going on recycling batteries and stuff, but there's not enough batteries to recycle for that yet. So we're going to need to mine a lot more. And yeah, so if you look at those markets, there could be some good gems, even if they're not directly mining companies based in those markets, because a lot of them are listed in London Stock Exchange or even in the US that are doing the mining in those countries. But just as a result of the wealth that's generated for the country, you'd see other industries doing better in those countries as well. But emerging markets is a tricky thing to really look at. It's much smaller market cap, it's much less liquidity. And that's part of the reason that I don't look at it as in depth, right? It's because realistically, the only way that I'm going to get exposure to it is through an ETF, and eToro doesn't have that many ETFs yet for that kind of thing. So, I'm limited in what I can really get my hands on. So there's no point in me doing too much research into it. But as I said, I'm not sure that now's again the right time to be doing that. Really, I think you want stability, a bit more stability at the moment, at least for the next 3 months or so, and then maybe start thinking about where you're going to deploy it. It's a good time to be doing research though, and kind of thinking about it. Isn't it already kind of the case? I don't know what that was in response to. Is there a way to buy stocks with crypto rather than cash, so that when the markets recover, we can double the profit? That's not how that works. I'm going to explain it because I feel like it will help you to understand it, right? But let's pretend that you want to buy some Amazon stock, and you want to buy it with crypto, so that you've got your crypto, yeah, and you want to benefit from crypto going up, and you also want to benefit from the stock going up. Well, when you go to buy your Amazon stock with your Bitcoin, what you do is you pay your Bitcoin. Let's say it's 1 Bitcoin, which is an awful lot. So I don't know, let's say you get 1,000 shares or something of Amazon. I don't know what it's trading at the moment. So you get 1,000 shares of Amazon for 1 Bitcoin, right? So now you've got 1,000 shares of Amazon and 0 Bitcoin. So then what happens is, if Bitcoin goes up and Amazon goes up, and let's say they both go up by 100%, you haven't made anything in Bitcoin, because when you sell your Amazon that's increased by 100%, it's doubled. you just get double. You get the same amount of Bitcoin because Bitcoin has doubled as well. So you don't make any profit in Bitcoin. So you can't really do it like that unless you're using some weird derivatives and leverage. So yeah, I'm not really sure what to say about that, but that's not a way that you can double your profit. You'd be better off by just diversifying and keeping a bit of both, right? Buy some stocks and buy some crypto, and then that way, if one of them does badly, then maybe the other one doesn't do quite so badly, or maybe it's even inversely correlated, which would be the best thing. Do you have one food/meal you miss and wish they made good vegan substitute? Mine's pork pies. Oh, pork pies! I do miss a good pork pie. To be fair, I have had some okay pork pies in the past, though vegan ones. They're normally a bit too dry, though. That's the thing. That's what they miss. Damn, you've made me like crave a pork pie now. No worry, it was about 2008. Vegan foods. What do I miss? I mean, it's going to be pretty boring, but basically just cheese. Yeah, see that slug nose. Yeah, cheese is the one. It's just not been. They can't get it right. They can, it's not bad. Like it's not awful, but you wouldn't want just a cheese sandwich if it's vegan cheese. But like some of them are pretty decent though. Some are like the one that Starbucks use in their little like toasty thing with tomato. It's pretty decent to be honest. It's quite nice. But yeah, no, cheese is the thing. It looks like questions are drying up. I've caught up with chat, so I will check eToro again, see if any more have been added, and then if they haven't, we're probably going to call it pretty soon. So if you've got any questions that you are dying to ask, get them in there, and I'll try and answer it for you. Yeah, no more questions on here. Do we want to see how far down we are today? 4%. Nasdaq 4.4%. So we are outperforming a little bit. Probably partially due to, mainly due to solar at the moment, I think, in the portfolio. Ford's starting to roll out their F-150s at the moment. I don't know if there's anyone who's posted anything on here about it, but they are. Got some more earnings coming up. Let me show you the calendar. See what day are we on? So, wait, where are we? Wrong Thursday. I was gonna say, yeah. So we had our before market disasters, like pretty brutal. Crocs is something that what's his name? Robert Merck. He's a big fan of Crocs. He's been screaming and shouting about that one for a while. Datadog's kind of surprising to me. I didn't expect that. I think a few people are surprised by it, but I know that there's a lot of people that have been bullish on it. So maybe it's like some sort of a squeeze or something that's gone on. Wayfair, like you can see this trend that's emerging, right? In all the guys that are selling stuff online, because we had Etsy before on the 4th. And yeah, so Etsy did badly, but then we've had Shopify do badly, and now Wayfair down here doing badly. I'm sure there's others probably. It does feel like that's starting to come a thing. Airproduct's quite interesting to see how they're doing because they do a lot of hydrogen stuff as well. I looked at investing in them a long time ago. Let's have a look at what's after the market today. You got Square, that'll be interesting. Lucids, I'm not expecting that to be fantastic, but we'll see. Cloudflare, I think they might struggle a little bit. in theory, this should be like, these are the kind of things that should be quite a resilient business, right? It's a service, so and it's a service that companies aren't really going to stop paying for just because the market's got a bit worse. Maybe they need a bit less of it, but like it's resilient revenue, which is good to have at this kind of time. Corsair is the big one this evening. That's going to be a tough one. This will be interesting, actually. Talking about emerging markets, this will be a good barometer. Again, it's an e-tailer. Like, we also saw Amazon. Amazon did really badly with their online selling. So anything that's like an online marketplace seems like a bad place to be at the moment. Luminar, I hold a bit of them. I'm hoping they're going to do well, but with companies that small, you kind of do get into the realms of hoping more than being able to accurately predict, especially companies like that are still so early stage. SunPower, as I said, they've got their earnings, so I think that's a pretty safe bet. A lot of residential solar. They don't make the panels anymore. It's a different company that makes the panels called Maxion. They split the company. Bloom Energy. Not sure about Bloom Energy. That'll be a bit more of a question mark. Probably pretty bad for them, I would reckon. Commodity prices. And then you're moving down into the small stuff. So nothing else great. I was stalling while you had time to ask questions, by the way. That's what this was. That was me stalling. Just going to check, see what's before market tomorrow. Looks like nothing exciting. And then after market on Friday, you basically never get anything really. Yeah, one company, because it's a Friday. Okay, let's have a look at the questions. And then after these ones, I will end the stream. Quick chat, keep him busy. Anyone asked about the NFT space and your views? Yeah, someone asked that earlier on. I'm still pretty bearish on it. I don't think. If you recall, I have been pretty bearish on NFTs for a while. I think NFTs, in principle, have all sorts of amazing utility, but do I think anyone's done it really well yet? Absolutely not. There are some good platforms upon which NFTs are built and traded. I still hold my position in Flow, my heavy bags. Yeah, so I think there's some good plays around there. There are some people that are partnering with good kind of content owners, getting good IP. And Flow is one of them. So I think that's a pretty kind of okay way to invest in that space if you really wanted to. But outside of that, in terms of like individual NFTs, there's very little out there. I would be buying it for the fact that I actually genuinely like the art, not anything else at the moment. There are some that are trying to build good economies. I think GameFi is somewhat of a scam, really. They wouldn't build these economies if everyone won from it. You see it all the time with these projects, right? You pay for your little NFT items or whatever, and you can trade them between each other and stuff. Except that, it's not in their interest for the value of those things to go up for you, really. Not for the majority of people. It's just like any other market, right? Like a stock market. The majority of people lose. That's just the way it works, There are some people that make more money, and they make that money largely at the expense of everyone else, especially in things like NFTs, because in a stock market, you can have it slightly different, right? Because you can have a situation where everyone invests in completely different stocks, and I say that my one's going to be the best, and you say that your one's going to be the best, and we're betting on completely different companies. And in reality, maybe both the companies grow, both the companies do well, right? And then nobody really loses, actually. In that situation, I guess, except people that don't own either of them. But in NFTs, you have that as well, but there's no products. It's not the same as stock, right? There's nothing fundamentally underneath it. There's no revenue stream. And until we see more stuff like that, so more DAOs essentially, decentralized autonomous organizations, until we see more DAOs and more DAO-like kind of structures to these projects and the economies that they're building, they're going to continue to basically, scam a lot of people. I mean, not necessarily a scam, right? It's not like they're pulling the wool over everyone's eyes. Some of them are, but there's not much actual value there for a lot of those. Seems to just turn a load of cartoon animals with rarity tables. Yeah, yeah. And the thing is, I think there was a survey for what's that game? I can't even remember it now. You know the game I'm talking about. The really big NFT game that isn't CryptoKitties. That's way newer. I'm such a boomer. All I talk about is CryptoKitties. I'm such a crypto boomer now. I don't even know what's hip and trending. And I mean, this one's not hip and trending anymore. Anyway, it's hip and trending for all the wrong reasons. Which is that it's performing terribly. The big fluffy things. Axie, there you go. Thank you, Ralak. I knew that someone would provide me with the answer. Yeah, so Axies, I mean, there was a survey, I think, that was done, it must have been like 3 or 4 months ago now, that asked a bunch of Axie players from around the world, a good sample size, like a big chunk of people, and asked them, like, if this game didn't have NFTs and it didn't have monetization, would you play it? Is it fun? And they all said no. Basically, it was like 80 or 90% of people said no. And it's like, well, there's your answer. Like, you need to have a good underlying ecosystem and game, right? Like, if they put NFTs in World of Warcraft, it will probably do pretty well because it's World of Warcraft. There's like a lot of money and thought and consideration that's gone into structuring those economies. Whereas so many NFT platforms are just so shallow in terms of their construction and their depth. And ultimately, like, if the actual gameplay isn't fun, then you don't really have a game. You've just got a job where you just try to earn your NFTs. And again, it's speculative, right? Like, if you're winning at it, then it's probably at someone else's expense. Sorry I joined late. Not sure if someone asked already. With the current climate in brackets war and Cold War with China, what do you think about commodities like metals? Also, possible shortage of food from Ukraine exports. I think the food shortage from Ukraine is going to start to stabilize soon. Like the east of the country is, really starting to largely start working again and start moving stuff around again. And I said in my full update as well that I believe the Ukraine made a deal with Poland to export some of their wheat via Poland, which obviously means sailing it a really long way around to get back down to Egypt and some of the African nations that they export to. But they are starting to export a lot of it. There was also news this morning, or maybe it was yesterday, of a Russian shipment of wheat that was stolen from Ukraine. That they went and turned up on Africa's doorstep on Egypt's doorstep specifically. And Egypt turned it down and said no. And then I think they redirected it to Libya and Syria to try their luck there instead, selling it the Russian ship. And I think Egypt and obviously the Ukraine and Europe, asked everyone to say no to it. But obviously there'll be some countries that say yes. But even if it's just adding inconvenience to Russia, then that's cool with me. In terms of how markets are going to react, like, again, obviously there's some stuff like I know Forex Pro or whatever they're called, FXPO, FGPO, I can't remember what their ticker is now. Those guys have their mine like pretty much right on the border with where the conflict is at the moment. It's in that kind of western. Did I say eastern before? I got them the wrong way around. Yeah, western side looking pretty chill. Eastern side not quite so much. So yeah, their mining facilities are in the east. So obviously they're going to be affected for a lot longer. I'm not too sure about the geography of like where all of the different resources there are coming from, but I think that realistically half of the country-ish is looking a bit more stable now in terms of from Ukraine's perspective. On Russia's end, things are probably trending a bit more unstable on commodities, which will actually, to a very small extent, hurt China a bit as well. I think it's very telling that China hasn't really taken any action on Taiwan during this, and that you're seeing. I mean, there's rebellion groups that are actually forming in Russia now as well, which is pretty interesting. But you're also seeing a lot of Russia's neighbours getting quite. How do I say this? Quite. I mean, I want to use the word leery, but it's a very English word. um, they're getting a bit cheeky. Like Japan talking about their islands, and then you got Kazakhstan has been kind of kicking off a bit recently. I mean, even China's had a few digs at Russia during this. Obviously, you've got the UK saying that they would defend Finland. A couple of days ago, they said this: that they would defend Finland even if Finland wasn't in NATO. That they would come to defend Finland. Yeah, there's like pretty much all of their neighbors are causing headaches for Russia now, and obviously we've got all these mysterious fires that keep happening around Russia, military facilities and munitions facilities and things. Yeah, there's all sorts going on there. I don't know where I'm going with this point really, but so yeah, I guess Russian commodities actually look like the ones that are going to become more affected than anything else, which may actually worsen the fuel crisis that we have for gas and oil. Because if for example, Kazakhstan and some of the other countries break ties with Russia, then they stop buying their oil and gas like the EU is kind of planning to do, largely with the exception of Germany mostly, then we're going to see more demand for oil and gas from other regions, and so the price is going to go up because they're going to carry a higher premium because they're not like blood oil, basically. Yeah, so I think those are the commodities that are more at risk generally, and the ones that are on the Russian side, I think, are more at risk than the Ukrainian side now, because I think the war has kind of tipped in Ukraine's favor somewhat. I don't think Ukraine is at very much risk at all of losing completely. I do not think that Ukraine as a country is going to disappear at all. It's like incredibly unlikely, unless there's like a full-on nuclear war or something. Yeah, sorry, I'm really rambling on this answer for no good reason. It's just like, I mean, there's so much to think about in terms of how it's all going to affect everything. And I guess the other thing that's going to affect commodity markets on the flip side of that, though, is with the slowing economy and stuff, probably going to see house building and stuff slow down. So you're going to see less demand for timber, less demand for steel. Same with cars and stuff, and even like mobile phones. And like we could well see demand for a lot of those things start to slow down a little bit as I guess markets kind of catch up to the reality in terms of the pricing of those things, which is a good thing because that's how you kind of stop inflation, right? Like there's less demand for something, then they have to drop the price if they want to keep selling it, and if they do that, then it becomes more affordable and happy days. Still got five CryptoGitties somewhere. I went through the hack. The bridge has been down for a month now. Yeah, they did get through the hack, if you want to call it through. Do you think it's better time to add further funds to our copy portfolio? Yeah, generally yes. Again, like I can't really say for sure because we don't know how long this is going to last. Obviously, you shouldn't be doing it if you think you're going to need that money anytime soon, because it could take more time than I expect. It could take more time than you expect, and you may end up needing some of it, and then you would potentially have to take it out at a loss or something like that. But because I'm copy blocked, if you invest now, then it's going to be essentially those funds are going to be invested over like the next 6 months or so. So it's not a bad time to do it, really, in my opinion. AMD versus MU, I still prefer AMD. Even though MU's valuation makes it look really attractive, MU always does that. And I think like Lisa Su will go down in history as one of the best CEOs, and AMD's like turnaround will be genuinely like studied by people in business studies and economics and stuff, for how well she managed to turn that company around. And yeah, server demand is only increasing. AMD is becoming ever more competitive and potentially even dominant in that space, especially since Nvidia missed out on their deal acquiring whoever it was, I can't remember the name of, ARM Holdings. Whereas AMD managed to get Xilinx, which adds more to their kind of portfolio suite to offer for servers. And yeah, servers are doing really well. That's the thing that kind of saved Amazon's earnings. It's the thing that saved Google's earnings. It's the thing that saved Microsoft's. Well, it didn't really save Microsoft's, but helped Microsoft's earnings. So yeah, cloud's where it's at, and AMD is selling a lot of things to cloud. I don't think it's going to change anytime soon. There's still a shortage. There's still backlogs. So yeah, they've got plenty of demand. Not really too concerned about it, and I think that they've got more demand really, and more kind of momentum behind them than MU has. Not only in terms of like product and management, but also in terms of sentiment, which I think is probably even more important. Because if people think that MU is a boring company, which most people do in comparison to AMD, then less people are going to invest in them. I mean, less retail investors certainly. Although maybe retail investors are dying at the moment in this market. Everyone's being drained of their funds. Okay, I've rambled for a really long time, and I know that I've got increasingly rambly as the stream's gone on. But I've answered all your questions. There's none left. I very much appreciate you all turning out to watch, and hopefully everyone enjoys this on YouTube when I upload it there tomorrow. Thanks for watching. Final message before I go: make sure that you're following the correct Jaynemesis on YouTube and Twitter and social media and stuff. My name is Jaynemesis everywhere, pretty much. I don't have a TikTok. I don't have Facebook. So yeah, if their name isn't spelled the same as how it is on eToro, then it's not me. And if they're on TikTok, it's probably also not me. So beware, don't get scammed. Thanks for copying. Stay calm in the markets, and yeah, go outside, enjoy life a bit more. Thanks for watching, everyone, and I'll see you guys next time.